Welcome. Here we are, Wednesday afternoon, 5 o'clock, coming to you live from Houston and California. Texas and California all at one. We got the mate and the Madav. And Johnny is going to fly down from the metaverse in a moment. If you like what we hear, smash the like button, smash the subscribe. And as soon as we get to 1,000, we got all these special guests lined up. So we got a ways to go unless you get amongst it. Anyway, we are ready to go here and roll. So an absolute classic day today on equities, and we spoke about it this morning. Hopefully you got on it. We had a classic retest of yesterday's big breaks. So it was a good short sellers day today, very clinical. Oil was also a clinical. It hit that plus 2.8 target. So we'll go through very quickly the news, shall we? Or do you think the charts today, Madavi? What do you think we start with?
Yeah, you can just kind of show what happened, kind of, and how today you got to call it the Morgan Stanley day, right? Because Morgan Stanley let it up and let it down.
Yeah, 100%. And now I got to give you a shout out, mate. That was a great call you did last night, recognizing what happened, and you shared it with everyone in last night's, how the Goldmans one had come down so hard, and that left, they'd shot off Morgan Stanley behind. So it left you the good opportunity to do that trade up and down.
That's what trading is about, recognizing it, and not only recognizing it, but being able to take advantage of it, and which I did pretty good. I mean, I got three.
Yeah, that was nice. You got up and down.
I got in 94, got out half at 97, got out the other thing at 99. So that was a nice way. And Bank of America kind of gave it away because Bank of America came first, and they bounced, and their stuff wasn't like the hottest thing I ever seen. Not the hottest chick I ever seen. You know what I mean?
Yeah.
So that kind of gave it away too. That kind of reaffirmed my thinking. It was going to probably be right. That's why I was able to get in and buy it real quick.
Yeah, I mean, and so that also gave a good recognition because it was testing those levels as far as the SPOO. I was doing the SPOOs and you were doing the NQs. It was testing those levels. And that gave us a good insight of what happened. As soon as they turned on those, it was pretty well a great confirmation. And if you haven't seen it, people, there's a good write-up on Morgan Stanley from the pit box on the website, all on their earnings. We're not going to bore you with that, but the highlights. But basically, Morgan Stanley actually had strong equities trading revenue, where all the other banks were down. But their fixed incomes trading was down huge, like 31%.
Yeah. Morgan Stanley wasn't the best earnings ever either. I mean, but
that's what I'm saying. Yeah.
I mean, people should listen to yesterday's podcast. They want to catch that part, and they could kind of, so we don't have to go over it, but they can listen to it.
100%. And then the other one was Bank of America, which Hitbox also put on the website. And what were they? They made their money in wealth management. And, they're the ones with the loans. So with them, remember, they're big on loans. They got the biggest mortgages in the US. So higher rates means more profit for these guys. As long as they don't go up too far and everyone loses their job by default.
When you're a bank and your name of the country, you're pretty secure. And,
that's true. They do have a convenient name, that's for sure.
You're going to fail.
So, so that was a good setup there. And actually, we'll go straight to the weekly charts to say what we were talking about there. Hopefully everyone tuned in this morning and got ahead of the curve here. But basically, if you remember yesterday, we broke down on a lot of these things on SPOOs. We had the daily. We broke down under that channel. And lo and behold, today, we came up and we retested it. So it gave you a chance to short. You didn't have to be overnight. And from that level, we fell like 80 handles. just straight down. I mean, it was a beautiful trade, and it was right at the top of the cloud. I mean, from a technical point of view, from a fundamental point of view, and the order flow, as Madavi just walked us through on Morgan Stanley and Bank of America, and of course all the other banks, it was pretty straightforward, really. And then weekly, we held all day. We tried this once there was a little bounce holding this previous low here and this Cajun, but we really couldn't get much, and we got rid of that and reversed it to close back down here at the Cajun. It's still right there, actually, so there is hope, I guess, for the longs. And on the 240, you can see it more clearly here. We went up, tested that, and just got ripped all the way down. So you didn't even really... I mean, I did try to finesse it once there, didn't I? But you really could have just stayed with it. And you can see on the daily that's really
it was tough, but, all the market indicators kind of gave me my belief, even though, I was holding some of that stuff and I just kept on adding to it. But I'm trying to hold my positions longer, and because whenever you start getting in and out, someone's going to get put in that popcorn machine. And today was
And the more trades you do, if they don't like punters out there, and particularly the dribblers, don't listen to brokers and analysts and all these finchwits that never lose and never trade. And I just want you to trade a lot. The more you trade, the more trades you do, the more you will lose, because your probability goes up, right? Your spreads go up. Your slippage goes up. So, I mean, as Madavi says, the popcorn machine, that's a good way of thinking about it, right?
I mean, there's days where you can trade in and out, but today, man, you get these moves are so fast that you just get twisted upside down in the position you're in, right? But I mean, it was kind of risky because I had some big winners. I was risking for like going negative, and I was like, man, I'm glad I was up on it, so I was able to take those risks.
Right. So you to protect from your downside. Like we did one long today where I moved it up really quick. That was that one we were talking about, this low here.
Yeah,
I mean, it kept coming back. So the other thing is to help you do that, what a big market maker will do. Once you, he doesn't need the chart in front of him. Maybe he did, but he would have felt that false break, that retest. And you just trade from the short side, right? And other than that one long, I think we were both of us short all day pretty much.
There was a couple times today you could have probably gone back and forth and made some money, but are you going to get caught in that last move, which was really fast when it came down?
And your whole day comes undone.
That's where you could shoot out your day. And I do that sometimes, and I end up losing some.
Yeah, and you can get some good slippage on that. So, let's go through, because I think that's pretty straightforward what I did on Spurs. And at the end of the day, we flattened it. Well, I flattened it because it was, right there you can see minus 2.8, actually minus 4.8 on the 240. But let's have a look at the NASDAQ, which was more your one. So,
we'll
start off with the daily, right? So you've come in, did you go long at all today? I think you just shorted off the back.
I went, so when Morgan Stanley was strong and everything, I was long the whole morning. As soon as I see
pre-market though, right?
It started shattering in the morning time. That's when I started getting bearish. And I said that to you. I go, mate, look at Morgan Stanley.
And it
up and take it down.
And it coincided with the technical call. The one I found hard today, and we'll go through it when we get to it, was the Russell. I actually kept over. I don't know if I was being overcautious. I'm just very wary of the Russell, because talk about moving fast. It's good when it's a great setup, but that's what we call the punters and dribblers index, right? It's all losing stocks, all the trash when we used to talk about that at the end of the year. So you get the wrong way on that, and then and so you do a mixture of. I like to trade that one on the IWM puts and calls. But you got to find the one where the market makers are at. Madavi likes that on the futures, the Russell futures. But either way, it moves very fast. So we'll get to that when we get to it. But so that was a nice short. Here's your daily short. And we'll just quickly show the weekly. And you can see what it did. It come up and retested this Cajun break and just was boom, straight down. And that's 600 points on the week, right? Just to put in perspective, people. Okay, here's your trade on the 5 minutes, what you're talking about. So this is this morning we've come up on, what do you call it? Morgan Stanley. Even though they're not in the NASDAQ, they did influence market sentiment. And so that's your trade. That was a nice... You stayed through this, right?
Yeah.
That's where I fiddled with
the Spurs. Towards the end when I started getting more comfortable in it and it started not swinging as much. And that's when I said, hey, man, this thing's going to break now. Because we weren't sure, I just had a feeling just because of where I saw the Morgan Stanley trade and just the overall things. I felt like we were going to go down today. It was just, the cheerleaders, they thought it was going to be the good old days. This is a kind of a treat for those guys who used to always buy dips, right?
Right.
You buy dips and you're not going to get rewarded now. So we're going to do the exact opposite. And I got some paybacks to get.
So what's interesting is you read on Twitter how or YouTube or whatever your social media or your different websites, listen to CNBC. So all these, I'm not bullish, I'm not bearish, I'm out the market, which is all bullcrap, as you know. But the funny thing is, the moment there's a bid or it goes green, there's a green bar, it's like, this is the bounce we're going to get. So the dip mentality is live and well, very much so. And so we've got to be wary about that because you don't know if it's the one where they actually put a bit of money on, right? So that got me a little bit on Friday. I had a little issue with my chart, and I tried it, and once you get to a level on trading, I'm a big believer you don't look at your P&L because it can affect your mind, right? So all of a sudden I'm getting dinged on stock. I wasn't a happy camper, was I? But the point being, where those, and that run was it. Then it's gone down ever since. So obviously I could have just stayed in everything, but
I look at charts, but I look at them just for a brief thing because I don't want to get too much opinions on it. I like to see what the market's doing.
Well, yeah, I get the markets off the thing, and I look at the market maker boxes. But
I do look at charts. I mean, don't get me wrong. I look at them, but I don't have them. So some people rely on them. I don't rely on them as much.
Well, yeah, so I have the market maker boxes, but it was and like you said, it was that quick move, and it was on Russell. Luckily, I flipped and went long on Russell and got most of it back. But so that's a good example there of usually I have two sets of income things running, but I was a little bit because it was slow. I was looking too much on charts instead of my market maker box. So these things can happen, and that's why A, don't have too many positions, but B, be aware because stuff like that can happen. And it's good in a room environment. You can kind of help each other, but it was just so the point being, these things can move very, very fast with you and against you. So
turn on you.
Yeah, I mean, so it's an important.
Just like
that was a weird one.
Really fast now. Just going back and forth like.
Right, and I'm from the oil world, so as you know, you see. So the point being, and
because it's going
these things
up to the high, down to the lows, like seconds back and forth. And turn on you. I'm short.
Yeah, I mean, So I mean, and on Nasdaq here, so it was a similar move. So this one here was so on Spoos. This is the one where I bought. Remember, I'd be up from the oil world. Eventually, I just chunked it and I went short. If we go back to the Spurs one, but you stayed through all this, and that's a good example, right? I mean, I know we're comparing apples to oranges, but it's sort of the same. That same distance, if Madavi had got in and out and chopped himself, that's what he's talking about, popcorn. That's 70 handles right there. That little bit just there.
And it was so fast.
So when you're direction and you're working, and that was a perfect technical setup and a fundamental setup. I
an
mean,
order
I know
flow.
we're comparing.
So Madavi's very good at watching the order flow. I tend to watch it more.
If Madavi had got in and out,
I do my maths. Maths work out, and then itchy bit. So that kept you perfectly in here, and you saw that.
So when you're direction and you're working, and it was a perfect.
Yeah, it just
And look at what that was. It's 8-8. It's perfect. So if you combine the two,
Madavi's very good at watching the order.
you know, when they match up together, pretty much when the two of us agree, it's pretty good. We're now going to Murphy's Law, but usually we're pretty accurate. So that
Bank of
keeps
America and
we're seeing the same thing in different ways.
Morgan Stanley.
And you want to look. It's all great to have theories. Oh, I can do this and that. At the end of the day, the market's always right. You want to be trading at the market and minimise what can go wrong. Pretty much things go wrong. Like I just said, I had a malfunction. We're now going to Murphy's Law, but use data, and a few of us are using those charts. We're seeing the same thing in different ways. Today you had one where your order system had a problem, right?
Yeah.
At the end of the day, if it comes at the wrong time, it can be a situation that can go wrong. Let's have a look at the Rusty, because this one you managed to stay short all day on this, right?
Yeah.
And a few of us are using.
Basically, I only traded the stock flows that I buy this morning, and I got it. So I traded that, and I traded one other one. Oh, I traded Alcoa.
Oh yeah, after hours. Yeah. We're gonna look at that in a minute. Their earnings. I actually haven't looked at the earnings, but I saw that was one I had forever as a long-term play because of aluminium or aluminum, whatever you want to call it. But yeah, you traded that after hours, right?
It was Morgan Stanley, that Vine trade, and
right.
It was the other one too.
What you guys traded SoFi again, right? Today?
Oh, and I traded that LABD. You know, this is a good one for biotechs, man.
Oh yeah, that was a good discovery. So often we watch high lows on our website and on another room they have a like a noise box, but on our thing. So we watched that a lot, and that one came up. I actually wasn't familiar with it all, but you were familiar with it. It was a reverse.
I seen it before. I think it's pretty new. Right. It's a triple index, and it's pretty new. This one I've seen it once before, but it's
it's LABD, right?
But until lately, but these biotechs are starting to get taken out to the woodshed too. So this thing could be a nice runner. And these are what these things are perfect for. These are the triples. So remember.
Yeah. So actually, we'll go through. I did one of those today too. I thought about that. On natural gas. So this is LABD, right?
Yeah, it's like the SQQQ2. If you don't want to spend $400,000, you can spend $36,000 and get the same speed.
Yeah,
right?
yeah, and that was good today because here's the other. So as in investments, both of us 100% endorse not doing it. To give you an idea, that SQQ we traded at the end of the year at $6. We traded today at $35. So you lose that money if you're in it because they do a reverse, right?
Long-term, do not do it.
Yeah, all goes 100%. And anyone from the natural gas world knows not to do those, right? Because of UNG.
The cold COL, that was a good one. I missed
KOLD, yeah. Well, actually, here's a funny thing. Because in the heat of the moment, you can kind of half hear things. So I go cold, because I was short on natural gas. Cold's the reverse split. And so you went and thought I said coals, which turns out you would have made a buttload of money on. KSS.
Yeah.
But, it didn't happen.
I don't want to try that.
So, yeah, of course it never happened, but it is funny. So here's that LABD, and look at that. That's that spike. You got this run here.
Yep.
You got all that run there. And then it came back by the end of the day. Like in the after hours, it's trading all the way back.
And I also traded that vaccine drug one. That vaccine one was like no shares traded. I bought a little bit.
Oh, yeah.
That thing was like, holy, I didn't realize. So this stock was up 6 points, right? And I was like, oh man, this got to be a good one. I did not look at it and see how many shares is traded. You know, and when I didn't see it was only traded 250,000 shares. It was up 7 points. I mean, there's no shares in there, but it went up, and it went up. I bought at 40, and it went up to 42 or 43, and I got out. But that thing moved on air, and the spreads were like $2. You got to pay attention to those things. What was the name of that thing?
I don't know. I remember. I think I was in future. I was around settlement for oil and gas. I think when you did that.
Come up.
That's not updating right now. The ARK funds. That's probably a good thing for ARK investors, right?
Yeah.
I shouldn't joke about that, but we will. So unfortunately, we found out a long time after the event, and so we've never actually traded it. But there is an ARK short ETF, right? I forget what it's called. When Matt or John is here, he can fill us in. So oil was a beautiful short today. It hit our target that we talked about. The fifth wave, we were looking at the 5 of this one. Did you find that stock?
Yeah, I just went through my blog and saw it. VALN.
VALN. Let's see.
Look how much higher it went. So they supposedly got the vaccine that's got the Omicron or whatever, So this one's supposed to be it.
Let's see if that comes up. VALN, right?
Yeah, it's an ADR. I think it's a European company or something.
Oh, there we go. Yeah, so that was at $28. The news came out. It ran to 49, it looks like.
Yeah. The 40. Damn, I should have stayed. I should have been patient and stayed in longer.
Right, I think this is a French one we've traded before, for maybe memory. For some reason, it rings.
Maybe I remember the French one. You were reading the French stuff, and I was like, man, I didn't know you knew French. Merci beaucoup.
Yeah. My wonderful French. It's not so good anymore, so I won't embarrass myself. I think this is it, though.
You guys got talents I don't even know.
Yeah.
Let's see, because it's Persian.
Merci beaucoup. Comment allez-vous? Yeah, I'll start talking Estonian in a minute. So here's the one this is our bread and butter yesterday. So as you know, Madavi and I have been pretty well of the opinion a lot of this crap was crap, and a lot of people made fun of us. And we're saying, look, when this stuff goes, it goes, right? Oh, no, this time it's different. Well, so that brings us to the old Rusty. We'll go back to oil in a minute. Sorry to digress there, but we talked big about this weekly, and it busted yesterday, and it actually came back and retested here today. I made the decision if I wanted to get short this, but via puts on the IWM, and here's the problem with a lot of these options. So don't believe everything people you read on, particularly on the FinTwit stuff, where people are saying they're getting filled. I had probably 6 orders out on this, and I couldn't get hit on the offer, and it was trading there. So sometimes if you're not a market maker, you're just going out and you almost have to rely on someone to buy you. So I kind of screwed this trade up. But you can see on the weekly, and you don't see it too clear there, but when we go into the actual area where we'll break it down for you, this was the level, right? And I couldn't get hit. Remember that? I was getting a bit frustrated, actually. You just sold the futures, but I couldn't.
Mean, you're an awesome option trader.
I couldn't get filled today, right? I had to buy them, and I tried to get hit on the bid, right? Not on the offer, sorry.
I don't do well. I know everything tends to expire worthless on me.
Well, I tried there. In the end, I bought some and made a little bit here, but it was...
I usually use the options more for, when I get myself in trouble.
To sell vol. Yeah. I'm I do a bit of that too.
Stock is running up and I'm getting like $5 and it's got to go up 400 points. I'm like, great, I'll take that. It just uses a lot of buying power. That's the only problem.
Yeah. So that's... So it's not as easy as it seems sometimes. The point we're trying to make is that So be wary. I mean, we kind of know what we're doing, couldn't get done. But this was a beautiful trade today. We did this twofold, A on the futures, on WTI or CL, you can know it as. But we got the 4/8s we talked about in the room with a couple of the guys. And it was a long-term trade, 88. You can see here 8/8s on daily. And we go through these in the market. We have a plan, right, and that's key. So we were able to get nicely short. And what was funny is a couple of the stocks kept going up, like USO, which is meant to be the ETF for this, one of them. We were able to buy puts on that for negligible amounts, right? Because so in a situation where everyone gets one way, they'll hit your bid, right? And so with oil, you get non-oil people start playing it here. They don't play it down here. This is, no one's going to drive a car. I saw someone today, I jumped on that OOTT, which is a good handle for oil traders. Hashtag OOTT, sorry. And, this is the last bull run ever. No one's going to use oil. I mean, I don't know what it takes to show the transition takes a while. But anyway, this was just a great short, 8/8. We counted out the waves this morning. That's why we said, smash the like and subscribe, because this is valuable stuff, not blowing our own trumpet. But
here's one important thing. If you miss, the 8 best trading days and say the market's up 200%, you miss those days, and the market, you're only going to make 30%. So if you miss these 8 critical days that are big days, it just destroys
I mean, and something like oil is a good example of that. If you didn't buy this thing down here when Uncle Joe made all that money by flogging our SPR down here, a lot of people, because of the bear, they kept not buying it until all of a sudden they buy it up here. The same thing goes the other way. That's why we use a grid, right? So look at that just today. By selling today at just under 88, 87.50, instead of here at 85, right? Or 80, I mean, it's showing it live there. I've got to look on. That's a massive difference. That's $3 on and what was the one we just looked at? Russell, right? Exactly the same thing. There's a big difference and you want to be the guy short getting this. And as Madabi said, you miss it. Look at that. That's 200 points? 100 and something? Wow.
I mean, you miss those 8 days. Instead of being up 200 or 300%, right, you're going to be up 20, 30% if you're lucky.
And we've all seen the statistics on the bull run. If you weren't actually long for a lot of those and you're getting in day by day, most of that S&P move on the way up happened overnight, right? And so what's catching a lot of people is they're staying in long and then they're getting pounded the next day. Or they're doing the FOMO at the open and retesting it. And so the same thing happens in reverse, right? The difference is in a bull market, so we're still really in a bull market, but we're in a bear phase. Let's put it like that. You usually get a chance. You had a chance today to resell that breakdown level. I mean, it was it's not always going to be like that, but you knew you were wrong if it got up above that pretty quickly, right? And the beautiful thing was the order flow gave you that comfort. But, I mean, pretty clearly there. And on where's our Natty? Natty's same thing, right? Follow the herd. So if I don't understand a market or understand a technical analysis or whatever, I don't bloody touch it, do I, mate? I'm I'm in a hiding to nothing. So you'll see people, so you get to know certain things. I'm pretty set in my own ways of what I can. I don't even trade the NASDAQ futures, do I? So, and obviously I watch the NASDAQ, but you find something that's good for you. So when I see non-oil or gas people telling me that I'm a half-wit or something, then you kind of know it helps you read the herd and the wave. Natty Gas, what was that today? This was just a real easy trade. We broke. Firstly, we know we had the weather thing, right? So boom, that's your fundamentals. We know that's already absorbed in the market. We're watching the models. We know all that. But it doesn't really matter. We watch how the herd reacts. So today, you had this. Everything had already turned down the 240. This is the cold trade, remember? Now the futures break, so we have a heads up. So you buy the cold. And so you got to, firstly, understand if you're doing these double, triple ETFs, they're very risky. So they're not for the faint-hearted. You want to be well-versed with the risk you're taking. Like that was exactly, you saw that one Madavi did today on the reverse, what was it, reverse biotech? Look how fast it goes up and down, right? That's different to this, but still, this at least has fundamentals behind it. But technical and fundamental crowd, you knew the crowd's in, right? We've worked out the trade. We said this is likely to be an A, B, C, right? And here we are, day in, day out, doing this sort of stuff, right? Just simple, counting the herd, knowing what the herd's doing, and how that reacts. And we're just doing, it's all math, it's all mathematics, right? This is all maths, right? Look at this. It's pretty clinical stuff, and I like it. And if you try to get emotional or too tight on your stops, you're going to get destroyed on a vehicle like this. So you got to trade knowing that, or avoid it. If it's not your cup of tea, don't do it. Here's Apple. Oil we just went through. And so I don't think we need to spend too much time on that. After the market, we did have, we had two things happen. We had the API report, which is all on the website. And we had your president out saying that they're doing all they can do to get fix oil and fix inflation. So take that with a grain of salt. This is what happened last time with that. It's sold on SPR, I think the market's reward. You've also got geopolitical risk is much to do with this. We have Kazakhstan. That's off the boil a bit now because Russia was pretty quick to quell that file, if you remember, where the paratroopers came in. That's oil, but Kazakhstan is also the second biggest producer of uranium in the world. So, and at the same time, you had Libya. You got the two main tribes there fighting over two ports. There's two major ports there, and that affects supply. And Libya's oil is very similar to WTI. It's very light. Italy's the main buyer of that one. And what's the other thing going on? Oh, yeah.
Syria.
Ukraine and Russia, right?
Yeah, Syria too.
Syria, yeah. The Middle East really isn't playing a big part now other than on, we got a nice pop out of the Houthis doing, when was that, on the weekend, on Monday, over there in Emirates, EU.
Oh, yeah, the little Houthis, the guys running around with slippers.
Yeah. So that can get some moves. Syria's more just they're very minor in the oil stage. It's more political.
You got a bunch of different countries and their armies are all there, so it could be a tinderbox.
Right, and that's a good way to put it. I think we have that named as a tinderbox. And you got good old Turkey on the other side, just an accident waiting to keep happening, right? So,
and you got booster country, the vaccine country.
Oh, right. So there is a lot of things there. And when it works, when all those countries keep themselves in check, it sounds terrible on one hand from a humanitarian, but from an oil, we're just talking about oil right now. It does keep it in check. But what's happened is, as we've gone over many times with oil, is that all the ESG and not increasing production. Remember, you got a president that came into power shutting down a pipeline with Canada. You've got banning drilling and all that on federal land, chaining banks. So there's not enough production. So the new production coming on out of Permian is all from Duke, so it's not going to be replenished, right? And then you've got the situation with OPEC and Middle East, and then you've got Russia, who's also one of the biggest oil producers in the world. Don't forget that, and natural gas. And then you're basically accusing them this and threatening them. One side of your mouth, the other side of your mouth, oh, can you please release some more oil? And then then there's, of course, Iran with the nuclear deal, right? And so it's just nonsense. I mean,
the guy from Turkey, he got him over there. He's a wild man.
I mentioned him, Erdogan. Yeah, it's an accident waiting to happen. So you've got all this, and that's underpinning this on lower production. So look, it would all be wonderful if we didn't have pollutants out there, if we didn't have to use coal, but you've got to have a plan in place, and all we had was just noise and no plan, and this is real now, and this is why inflation's through the roof. Majority's energy. The other big thing that finally I heard it mentioned today from Joe Biden, the president of America, that we're looking at what do you call them, tariffs. Well, if you recall back, that was, Trump shouldn't put on tariffs and all that in the trade war. And well, what's actually happened in reality, there's a bit different reality in what they tell you. We have more tariffs on now than ever. Now, tariffs means higher costs for the consumer. America is imports. We know they're $80 billion in the hole each month, right, mate? So they're importing this stuff. Most of it comes from China. They got massive tariffs on. Look, at least two of my dogs could work out that's making it more expensive, right?
Well,
it's that bloody simple, people. It's really that simple where our costs are. And Powell's aware of that, but he's dealing with this. And now he's copping all the crap. All we heard today was it's all on Powell, right? I mean, so that's the thing. Just think of being all these kind of guys.
And this stuff, mate. You know, there's someone behind it that doesn't care about the American people. Cares about his own bottom line. That's all.
Yeah, it's all about profit, right? And it's silly. So let's go back to oil real quick. So here's our chart, real simple. We're testing this previous high. You can see it coming off. This is that high that we labeled a 5 or 5 or 1 or 5. Now, as I said yesterday, for this to be the 5 of 5, in other words, this to be the top of this whole thing, this would have to be a B flat. Yes, that's higher. That has to go down almost immediately, right? So really, it's a big ask, but so that's pretty cut and dried. Went through Natty. Is Meta Johnny back yet?
Meta Johnny's in the meta world.
He's still in the meta world.
I'm here, guys.
Oh, here he is. So here he is. So we're gonna look at the meta world.
I don't know if you're welcoming your new son or something in the meta world.
Let's try it on.
So we'll leave that one alone. That's a bit of an in-joke, people. We'll leave that alone. We'll let that go for the Australians and the English. We'll let that go through.
Can you hear me, guys?
Yeah.
So here's Bitcoin. Remember, we've labeled this as a 3 or a 5 of degree. We're sitting right here in our little. It's all pretty straightforward, really, what's going on. We tested the 50. We're in there, technical, and we'll go through the 60 real quick for Johnny. There's
I hear you, Johnny.
There you go.
Sorry,
Meta N.
Haywire that didn't fully transport to the metaverse.
What didn't transport to the metaverse?
My headset,
Oh, man.
Hey, is Zuckerberg watching you again or something?
You need to get the glasses, man. Going up. You should just get an implant. And you'll be set.
So here we are on Bitcoin's pretty well gone sideways since that collapse back on the 10th, and we had that spike a few days later. So that's what's interesting. It's churning. It just shows you the people that trade this aren't necessarily NASDAQ. They all have us believe it, but we just looked at NASDAQ get wrecked, Russell get wrecked. So it's obviously a different market. So what's the news from the metaverse, Johnny, other than your headset doesn't work? Is he still trying to plug in there, is he?
I'm telling you, he needs to get the implanted.
So, well, we had a quick look at all the stocks. I don't think we need to spend much more time there, but hopefully you learn a lot of what we're trying to tell you on technicals, people.
Any question, just put it in the box and we'll try to answer it.
Yeah. I mean...
Can you guys hear me?
Yeah, we hear you very little bit. Yeah, the metaverse is collapsing just like the stock market. What's going on?
Damn.
We can hardly hear you, Johnny. Give me 1 second. Let me see what we can do here in Techland. So we got you on full. So very straightforward technical market. Nice play here on oil. We have EIA out tomorrow on both natural gas and oil because of Martin Luther King. Today's EIA report, as you know, is pushed forward to tomorrow. And the API number was out tonight, which we went through real quick. And the natural gas number is out tomorrow. So, lots of good stuff there. Anything else really to cover? It looks like the metaverse is in rotation in the in the black hole tonight, probably where it belongs, or it's spinning around a ring around Saturn.
He's gonna make it on here in a second. Let's see.
Well, while we're waiting on that, let's go over the actual things that happened today that we talked about. Technically, some numbers for you. We know that both oil and gasoline had big days today. Natural gas had a down day. All these numbers, of course, are on the report we do that goes with this podcast. As far as natural gas goes, the atmospheric G2 model still looking for well below normal temperatures are expected across the Central and Eastern America. We actually had thunderstorms today in Houston, so they're probably all up north if they're
there you go. Meta world.
Yep.
Yeah, well, let's just finish off with this real quick, and then we'll finish up with Johnny. Metals were all up today. Gold had a big day today, actually, as the US dollar went back towards that 2-month low. Gold was up a $30 today, and I'll bring the chart up on that in a sec. We'll bring that up for you. But gold had a big day, up $30, nearly 2%, and that was the highest settle since November of last year. There's a big move on gold. Gold tested all the downside yesterday at 1,800, held on to it, and here we are at 1,843 on the Feb futures. March, silver was a big move too. That was even bigger. Poor man's gold, right? Up 3%, so that tends to move more up and down, up 70%. As far as the stock market goes, only 2 sectors were up today. Oil sector actually came off by the end of the day. What were those 2 sectors up? I saw it earlier. Consumer staples was up a little bit, and utilities, but continuing just weak on all the stuff we talked about, right? Financials were down hard, as Madavi said, when Morgan Stanley took them to the woodshed. Information technology down hard. The ARC ran aground again, Johnny. Not a pretty day in Arkville over there. Let's go through that real quick. Where's the ARC? And yeah, so ARC K was down 1.5%, ARC G down 1.8%. These things are down, over the last 2 days, 6% on ARC K. ARC G, wow, that thing's down 8% in 2 days. That's why you made good money on that biotech one, Madavi. That's their version.
Yeah.
ARC X, whatever that is.
Space.
Was near space.
That's their space.
3%, it's in space, mate. It's in one of those rockets. And ARC F is now down. This is over
Fintech.
2 days. What one's that one?
It's fintech.
What's the F stand for? I got a few ideas.
Fintech.
That's down 5.5%. And ARC W, got a few ideas for whatever that is too. That's down 5%. So, yeah, there's some destruction going on there. A lot of it's people selling out of it, just general selling. There's a short ETF, no doubt that's attacking it. So before America's markets ran aground today, all of Europe closed up other than Italy. Italy was the only bad one. Asia, we talked about this morning, was down. This is all to do. But here's what's interesting. So a lot of people get it wrong about bond markets. I've never seen, I don't know how to say it nicely, but I've never seen the ignorance that abounds on things like FinTwit, about what the bond market is. It's just regurgitating the crap they hear out of CNPC. In simple times, bond market's strong, stock market's weak, right? I.e., because it's choice of investment, it's a safe haven, etc. So when you have a strong bond market today, it meant they were buying 20-year bonds, right? So it went up. That was when the stock market really motored to the downside. I'm looking at things. I try not to get on there too much. Just have a flip around 5 minutes here and there when I'm trying to not trade. I see people saying that's good for stocks. It's a complete bloody opposite. Think about it. It's an alternative. It depends on the cycle of the sell. So when higher interest rates are banging things down, yes. But when it flips the safe haven, and so little things like that are important to understand. And there's some real good bond traders out there that are actually on Twitter and stuff. So I'll share with them later. Some of them like to be a little bit quiet. But just think about all that. Most stuff is logic if you want it to be. But if you're looking to be spoon-fed, then be wary, So that's pretty well the bond market. And it come back real strong and it's straight. Most of the curve closed near their highs today. I think we covered everything. I think we're ready for Johnny, aren't we? Are we ready for Johnny, Madavi?
Yeah.
Well, Johnny's here. Johnny just is giving you a little bit more of the same.
So more
Same
of the
thing.
same. We want to hear something spectacular from the metaverse.
Spectacular.
There's your Bitcoin.
Bitcoin is trading sideways. It's just hovering around $42,000, trying to find direction. And the more research that I do and the more I find out about it is there's really an impact of what we've talked about
the more
over the last couple of days.
But anyway, sorry.
Yeah. So, since it's the grandpappy of the crypto world, it does, have a huge influence on all these other crypto tokens that are out there. There are some that are doing well, that are more related to in-game playing, the games that are out there for kids and gamers. But when it comes to Bitcoin, more specifically, it's a lot of what's going on with the open interest, and that's relative to the market cap, meaning the amount of open futures contracts that are out there in the perp market. Okay, right. So that's perp is short for the perpetual market. So it's the most liquid product or the most liquid part of the Bitcoin market, right? Simdav, you've traded, the futures. That, yep. When you start doing swaps, they give you a lot of stuff. Hold on, something just turned on my computer. Give me 1 second. My computer just.
Wow, what's happened to the metaverse? I thought that was the future, Madavi. It's falling before our eyes.
Yeah, what's going on? I cannot believe this. Out of nowhere, my computer just went down. So I apologize. 1 second. It's not turning off either.
Uh-oh. So we got. We'll continue what you were saying.
So basically, what it is there's a way to put more liquidity by leveraging the futures market, and those are giving a lot of these ETFs. There's a ton of ETFs that we've talked about, and those ETFs that are out there, you have the sides of the spot market is one part of it, and then the other side of the market are the people that are doing the things that we're talking about with these ETFs. And the way that it's just playing out is it's creating a distortion of what really is happening with the price. And I'll give you more information when my system comes back up, because it's hard for me to hear you. But this is really kind of like a balloon that's been filling up, and it's just getting bigger and bigger. So it's hard to distinguish between who's long and who's short. And the whole process of learning about the open interest and the way that it's affecting things, they're finding more information about when there becomes a spot market ETF, or a way for these investors to get exposure to Bitcoin through different institutions. It'll help form what they're hoping is more of a base. So I hope that helps you, because it's hard for me to help when it's that I can't even hear you guys.
Some people say that's a good thing you can't hear us. But one thing I forgot to mention, actually, thanks for that, Johnny, was we had a really strong housing number today. Well, specifically more a building permits number for December. I mean, it was up, and it's on the website there, but big numbers. What I found interesting was the market's reaction to it. So there's a home construction ETF called ITB that we've traded a few times. That actually fell 2.5% today. So despite that strong market, there was two things. KeyBank Capital Markets, who I can't say I really follow, downgraded a number of stocks there. If you remember, who was it who had earnings there last week? Was it KBH, Madavi? They went up big on it. Everyone was surprised that they did so well because the lumber and all that was up. I think it was KBH, right?
Yeah.
So anyway, that was down on that. That gives you an idea of the sentiment that's out there, right? The only reason, if you want to look, if you break it down, the multi-unit dwellings instead of single dwellings was the driver of it. That means, obviously, there's less houses, less building profits and stuff like that. And also the mortgage apps were actually, they always come out on a Wednesday, I think. They were up today for the second week in a row. So it's an interesting market. And I saw somewhere today that the wealthy was it the wealthy 1% or 10% of the world? 1%, I think, doubled in wealth in the last 2 years for all this pump priming. So the billionaires of the world got so, and the poorer percentage got it significantly poorer because of COVID, right? Not going, all these lockdowns and everything. I just wonder, Madavi, how long people are going to put up with that? Particularly now you got rising interest rates, if they're going to lose jobs, they can't have a mortgage or whatever, right? How long do you reckon they put up with it? Or do you think I'm being a little bit too old school in that?
Yeah. No.
I mean, you got a bloke like Bezos, doubled his wealth, right? Playing rocket ships, spending all his time in the gym or getting chemical prepare, whatever it is, and just effectively gloating about the wealth. At least someone like Elon Musk is out selling shares to pay his taxes and making a thing about it, right? I don't know. It's just I saw that yesterday, and I'm just wondering. So everyone right now is. I mean, it seems to be the protests are all about vaccines or vaccine passports and stuff. What happens when they actually start focusing on that? Interesting game, I think. Anyway, let's look at gold before we shut down, because that was the big mover for you today, and I know you like your gold. So let's look at the hourly. That was a big move today, people. And I'll just bring up the new charts for you, so it's running across the screen. We obviously haven't looked at hourly for a while, but look at that. You can see gold has been pretty well. If you think Bitcoin sideways, this has been the same thing. So today, look at this explosion to the top side, right? So it held and held. It broke over 1,800 last week. Tested it, came back and tested it. And then it exploded up $30 today. It's off the highs a little bit, but that's an impressive move. So if we look at that, and we look at copper was another one today. Last time I looked was up pretty good. So for the first time for a long time, we're seeing gold actually act like it traditionally should be. It's a safe haven, A, and B is which bonds did today. So what I found interesting, the gold went up with bonds today. Did you notice that? I mean, I just thought that was significant. Copper was up most of the day and then came back. So to answer that question. Anything else, guys, we want to look at? Are we all done? We ready for nicer rest? Tomorrow we have the natural gas and oil numbers out of the Department of Energy, the EIA. We have the jobs report for Thursday, initial and continuing claims, existing home sales, which will be watched after that number today, and the sell-off on the home construction index. And we have Philly Fed index. That's what's out tomorrow. So that's all that I got from me. Anything more from you guys?
No, that's it. Just kill it.
Let's kill it. Yeah, do well. Good day today. Let's see if Johnny can find a landing strip to come back from the metaverse for tomorrow. Remember, smash those like buttons, smash those subscribes. Lots of smashing, it sounds like. So as we go, we see S&P getting sold off further as futures have reopened further into early Asia. So we're now trading at 45.25 on cash on the S&P. Now, in the bigger picture, we're not a lot off highs, you might argue, right? 300 handles. But the reality is it's very heavy levered. You've got very heavily, much leverage, much heavy margins and the like. So we'll see how that comes in the morning. We'll see everyone in the morning. Thank you for listening. Thank you, guys, for joining in. And we'll